I built my company Flash Consulting to 7 figures in 5 years, and I did it all debt free. And in this video, I'm going to walk you through the exact stuff that I did so that way you can do it for your business. And if you're currently running a business, I'll give you strategies for running a 7 figure business and being debt free at that. So I was recently on the Upflip podcast and we talked for 30 minutes about running, scaling, building a debt free business. And I thought I would go a lot more in depth in this video because that was more targeted for people that were just starting out, which if you're starting out, I'm going to give you some good nuggets there as well. But let's get right into this. So I'm going to break this video into 3 parts. First, it's going to be about how to start a business with no debt or even start a new division or service in your business with no debt. The second thing we're going to talk about is scaling with no debt. So once you get a scalable model in your business, how do you scale to the next level with no debt? And the third part is how do you maintain no debt when you're running a 7 figure business? Specifically, when you have payroll, that's a lot of money, and you have a bunch of team members that need to make sure that you have schedules full and work for them to do. So we're going to talk through those 3 things in this video. All right, so starting a business or a new service line in your business with no debt. And the reason I say new service line is because you might be doing a service. Let's say you're a home service type of business and you're electrician. Let's say you do EV chargers, electrical vehicle chargers, and then you want to get into something else, maybe generators, but you don't really know. You're going to kind of, put your toe in there and see, can I do this? Can I not do this? You can use this same strategy in that sense as well. We do this in our company. We have a couple different service lines that we're looking at offering. And so slowly I've been putting my toe in there, but building it from a very smart perspective, not just diving in and taking on a bunch of debt and saying it's going to be the greatest thing. So we're going to go right into this. In my opinion, service businesses are the easiest to do whenever you want to do no debt. The reason is because you can do your service based off of your time. So you're basically trading your time for money. You don't have to invest a ton of money in building out all these products that then you would potentially have to take on debt for. You can literally say, hey, I'm going to do gutter cleaning or digital marketing or accounting or whatever you're good at, and literally just trade your time for money. So when I first started the company, that's exactly what I did. I was the director of business development at a $3 million home service business, and I was crushing it for them. He referred me to a couple of people and was like, hey, you should go be a consultant and do this. And so I literally set up a consulting company, Flash Consulting, and I started trading my time for money. I said, hey, I'm going to charge $50 an hour. I'm going to get 40 hours a week. That's going to put me at $100,000. All good. The problem is that it's not very scalable and you can't go on vacation because then you don't get paid. So I started to get referred to other people and I started to productize our service out from there. And this was something that if you're looking at doing a service line or starting a business, this is what I would recommend. So people take that example that I just said and say, okay, well, yeah, but if I start an electrical contracting business or gutter cleaning business, I still need equipment for that or this. If I start an accounting firm or something else, I still need QuickBooks or whatever that is. You still need stuff. So here's exactly what I did. I went out and I sold it before I bought the stuff. So what I did was I knew that I wasn't the best at digital marketing at the time. I didn't know how to do things, and I still don't know how to do things in my own company. I just have a great team that does stuff because I don't have to know how to do everything. So what I did was I found a digital marketing company that knew how to do the back end stuff. And I said, hey, I'm going to go out and sell clients. And each client that I bring on, I want to use these specific services and then just bolt them onto my offering. Sound good? They were like, yeah, that sounds great. We'll even give you a discount since you're going to send us a bunch of people. Cool. Then I knew how to do the actual trade my time, talk to these people, manage the account. Then I had this company here that was going to support me on the back end stuff. So I had an offering that I could go out and say, hey, I'm going to charge, let's say I was charging around like $2,500 per month, $2,000 per month for this service. Then when I would go to them, sell the service, then I could go back to the digital marketing company and say, cool, I just got another person signed up. Let's bolt this on. I'll take the money from them, pay this person, and then we get the ball rolling. Same thing if you're going to start a new service inside of your business, go out, put feelers out, maybe do it for free a couple times if you have some cash flow, or build out these partnerships and then try it out. Hey, let's get this money up front, put these pieces in place, and then do it like that. So that was my game plan when I first started, which is how I could scale with no debt, because I was basically taking the money that people were paying me and then paying the people that I had put in place. And it was very easy to scale up and down. So if I lost a client, I just got rid of that expense, brought them on, and it was basically plug and play. Very, very good way to start a business, in my opinion. It helped me significantly, especially for the first 2 years, because I was still trying to figure out my product value, my productized service, and how I was going to fit into the marketing, exactly how I was going to get it. 2 years into my business, that's when it kind of all started to click. So there's kind of three parts before I get into the actual scaling of it. There's three parts that I focused on, which was the account management. So who's going to actually talk to the customer, sell the thing, manage the relationship, the delivery. So who's going to actually do the service? And then a really big one that most people miss, which is profit. How are you going to make money on top of this? Because a lot of times, and me included, when I started out, I was just trading my time. So I was saying, okay, well, my time's worth this, and then I'm going to bolt this on over here. And I didn't have that profit arm. And this is where people get stuck, because you can't scale without debt if you don't have profit, because you have to take that profit and you have to plug it back into your business and invest it back into your business to do different things. And if you don't have the profit, you can't scale, and then you have to take on debt. So that's the three parts. Who's going to maintain the relationship with the client? Who's going to deliver the services? And it could be the same person. And then you got to have your profit there as well. I was fortunate that I came across a book called Profit First, and that has helped me in all three of these phases. Starting out, it helped me give me that framework of I need to have a profit section in my business. It also helped me in the scaling phase and the managing phase, which we're going to talk about in a sec. All right. My philosophy has always been this when it comes to scaling, starting the business, and even through the scaling process, is hire a company fractionally, like what I did. I hired a marketing company fractionally. So every person I bring on, I'm going to plug this thing in. Then from there, I hired a freelancer. And sometimes I would not go the company route because it was just too expensive, and I would just get a freelancer that I liked and plug them in for different things. And between those two parts, I would build up that partnership or that relationship into what a normal salary would be for a team member if I were to bring them on. So let's say it was that marketing company, I'll be bolting them on. Once I hit $5,000 a month that I was paying them, I knew that then I could start piecing out pieces of this equation for that's $60,000. That could be a full-time person potentially, or a freelance person, or two freelance people. So you see, I plugged these people in, then I would slowly build them up. Once I got to a full-time salary, then I knew that I had the jobs on the books, the schedule, the calendar, the work to hire a full-time person, and then I would bring that person in. So that was the game plan when I was starting the business and how I got to the scaling phase. Now, with the scaling phase, I made a little bit of a mistake here that I learned down the line that maybe you could look for as well. So there's a really good book called Buy Back Your Time. And if you're in this phase or you're looking to scale your business or you feel like you're doing a bunch of stuff, this book is a game changer for me because it gave me what's called a replacement ladder. And this book's by Dan Martell. And he has this replacement ladder, which is what do you replace first? And he has a great quote in there that hit me like a ton of bricks was, you don't hire people to grow. You hire people to buy back your time. And this was a game changer because a lot of times people think, well, I'm just going to hire another technician. And if you're not the technician that's out in the field, then it's great to hire another technician, but you need to be focused on buying back your time of things. And I did that, but it wasn't exactly the way that he says, which is this replacement ladder. And the replacement ladder is this. Number one, you hire an admin person. So someone needs to answer the phones for your company. Someone needs to respond to your info at email. Someone needs to be doing, putting your checks into your QuickBooks. All this admin stuff that just piles up and piles up, which I didn't do that until I just got probably about a year ago. I just hired someone to help with this stuff because I'm like, oh, it's not that much. Oh, it's a lot of stuff. Trust me. Number two is going to be delivery. So who's going to actually do this work, which that's what I went to first. I got someone to help me with delivery. Number three is marketing. And I'm still doing marketing in my business. And I also have fractional marketing people. And then number four is sales. So who's going to do the sales in your company? I still do sales in my company. And then number five is management. Who's going to manage everything? And I still do management in my company. So I'm slowly chipping away at this. But if you're looking at scaling the business, you really want to focus on buying back your time, not just hiring to try to grow. And that was something that really helped me out. So one other big part to this is that you have to have profit in order to hire people. Kind of like what I mentioned before, you have to make sure that you have profit because what happens is this is exactly what happened to me. I got the business to about $200,000 in revenue, and I hired a virtual assistant. I had these fractional people that were doing stuff, and it was great. I was making, decent money, maybe $130,000, $140,000 after all my expenses and everything. So it was great. So, but now I had to take that money, that profit that was there, and when I say make that money, it was like my pay plus profit. So I still kept my maintain my salary pay, and that profit that was on top, I could have taken it out of the business. But I decided to take that additional 50, 60, $70,000 that was in there and then go and hire someone to replace me as an account manager. So that started to buy back my time and then allow me to build out the next phase of the company. So it was extremely terrifying, to be completely transparent, because I was making revenue of 200,000, and after all the expenses, right, 130, 140, I was only paying myself like maybe $70,000. So I had about $60,000 there. So now I could take this $60,000 for the next year. Hopefully all my clients stayed and everything. And I could go and hire the next person to be an account manager on my team, which was someone who's still with us to this day, which was, it all worked out great. But I was able to take the profit, hire someone. A lot of times people fall into this trap. They see this profit and they say, okay, well, now I can increase my pay. And then they don't have that profit to hire and they take on debt to hire, which helped me tremendously. So as I said, I was terrified. It was very scary because I was always of the mindset of like the scarcity mindset. Well, what if all my clients leave and then I have this person that I need to pay, that whole thing. And you have to do it. The beauty of it is that you're doing it with profit money that you already have. That way you don't not taking on the debt. Cool. And even now, I'll be completely honest. I made a note in here that we actually ballooned currently in our current state. We're up to 12 team members now. So I grew the company into 12 team members. That's going to help us scale to the next level. It's in my business, we're a consulting company. So it's a lot about what people know, the training that they go through, the immersion into our culture. You can't just like plug in someone and actually have them do the work without them going through this whole knowledge gap of about 3 to 4 months. So when we bring on someone new, we have to pay them obviously to get up to speed. And then we have to have the work to feed them, the clients to feed them. And so right now I'm in the business where luckily we have the cash, and we're going to talk about that next. We have the cash to pay people, bring them on, get them coached up for the first 3, 4, 5 months, and then we can push them forward to get new clients and then scale to the next level. And that's exactly where I'm at right now, which is in the scale phase. There's this weird ebb and flow, which, we actually help companies go through this process, but it's like the supply and demand curve. Okay, well, if I hire these people, am I going to have the work to fulfill their schedule to maintain having these people on my team? And this is the part that a lot of companies hit when they get to around 7 figures, maybe a little bit below then. And even through the scale process for me, it was like, okay, if I bring this person on, do I have the work to feed them and maintain their pay? And then how do I get to the next level? And there's a component of that to having a great sales and marketing channel that you feel confident in the lead flow that you're getting. Also building performance pay into the team members that you bring on, so that way they're hungry as well once you have a good model. So that's kind of where I'm at right now, to be honest. And then the third part is maintaining no debt. So when we talk about maintaining no debt, a lot of times you get this scalable approach like what I got. Okay, cool. I have a game plan. I have delivery. I have a team member. Like I could do this. I see the way to get to $10 million. Like I can see it. So it's easy to think, okay, well, if I just go get a bunch of debt, I could just hire, 5 consultants or 10 different consultants and then coach them up for 3 months and then turn them loose because they're motivated and they have performance pay and they're going to scale the business and then we're going to go crazy. That is a very real possibility, and it's a way to look at things. For me, that's not the approach that I take. I'm more using the company's profits, a percentage of it, not all of it now. I'm using a percentage of it. Usually I'll do about like, I think Dave Ramsey in Entree Leadership, he talks about doing like 30, 40%, leaving some retained earnings in the business so that way you can grow your cash position, but then taking some money off the table and then also investing into the company. So we kind of split it like that. I'll usually leave about 50% of the profit or retained earnings in the business, take the other amount out, and then I'll start to build from there. Now, Profit First has a really great way to know if you can scale. So Profit First is the book that I mentioned earlier. Basically, the way that it is that you have 5 accounts that you set up for your business. A lot of times I fell into this trap too. I was running my company out of a checking account where all the money from everything came into one checking account and it would just sit there. So imagine, if you're running a 7, 8-figure business, you got hundreds of thousands of dollars sitting in your checking account and you're like, okay, well, I got to make payroll, tax, equipment, all this stuff. And all this stuff's pulling out of your checking account, going into your checking account, and you don't know what all's there. You're just looking at it every single day and you just see a dollar amount and you're like, I think it's good. I don't know. I think I can make this or make that happen. Anyways, Profit First fixes all of that because it puts it into 5 buckets. You have your payroll, you have your operational expenses, you have taxes, you have your owner's pay, and then you have your reserves, your actual profit account. So when the money goes into your checking account for actual income coming in, then it gets dispersed by percentages into your different accounts. The reason that this helped me tremendously when I went through the scale process and even currently managing and still scaling is because as these percentages go into these buckets, it will give you permission to make investments. What do I mean by this? Let's say you're in your payroll account. Let's say you're putting 40% of your income into your payroll account. That 40%, as you grow your business, the 40% also grows as well. So you'll know if I have an additional $5,000 in my payroll account every single month, well, now I can hire a team member for $5,000 because I have the income to support the growth. And that is the whole transformational part of Profit First. That's one part. The other significant part is that you actually have profit in your business. So you have a percentage that goes to profit that gets stuck in another account that's never touched. So imagine if you want to do 10% profit, 20% profit, 30% profit, you set that as your profit amount and then you put it over into your profit account. And now you're building your retained earnings. And if you want to take that money out of the business, you can. If you want to invest it back into your business, you can as well. This was something that was huge for me, a big unlock. I had Mike McAllowitz on my podcast and him and I were talking about this and I was like, okay, this makes complete sense. If you take the money out of your business and you were to buy stocks, real estate, whatever, usually you're going to get a 10% if you're good return on investment. When you have a business that's producing profit at 20%, now you know if I take this money and invest it in my business, then I'll get a 20% return out of it because I have a scalable model. So it's basically an investment that you know if you feed the investment more money, it's going to produce another 20% out of it. And it's an investment that's going to continue to grow that you have ownership over, which was transformational for me because I used to feel like, well, no, I want to take this money out so that I can build wealth outside of it, which I do. And I still want to, and I do that. But I also want to give myself permission to take that money and invest it in my business because I have a scalable model that works. So when we talk about maintaining no debt, a lot of it comes to the mindset of, no, I have money, I have retained earnings. Could I do this big shebang and go to $10 million quicker if I use debt? Maybe. Could I take on a lot more risk and lose sleep every single night? Probably. And maybe it will work, maybe it wouldn't work. But at this point, if you have a 7-figure business and you're generating profits out of the business and being able to pay yourself, then you're at a really great spot that a lot of people may not be at. So having reserve funds in your emergency accounts is huge. Hopefully this was helpful going through this process of like how I built a 7-figure debt-free business. If you have questions or you want more videos like this, drop a comment below. I can go more in depth on specific things. Really curious to get your feedback. Be sure to hit like and subscribe, and I'll see you in the next video.